Righty-roo. This is night 18 of Rich Dad Poor Dad Annunciation Practice. I'm on page 161, I believe I left off with. Okay. A year later, the depressed Oregon real estate market had begun to pick up. California investors, flush with money from their still booming real estate market, were moving north and buying up Oregon and Washington. We sold that little house for $95,000 to a young couple from California who thought it was a bargain. Who thought it was a bargain. Our capital gains of approximately $40,000 were placed into a 1031 tax deferred exchange, and I went shopping for a place to put my money. In about a month, we found a 12-unit apartment house right next to the Intel plant in Boverton, Oregon. The owners lived in Germany. Had no idea what the place was worth, and again just wanted to get out of it. I offered $275,000 for a $450,000 home. They agreed to $300,000. I bought it and held it for 2 years, utilizing the same 1031 exchange process. We sold the building for $495,000 and bought a 30-unit apartment building in Phoenix, Arizona. Kim and I had moved to Phoenix by then to get out of the rain and needed to sell anyway. Like the former Oregon market, the real estate market in Phoenix was depressed. Whoa, what is depressed? Blah, blah, blah. Yes. The price of the 30-unit apartment building in Phoenix was $875,000, with $225,000 down. The cash flow from the 30 units was a little over $5,000 a month. The Arizona market began moving up, and a few years later, a Colorado investor offered us $1.2 million for the property. The point of this example is how a small amount can grow into a large amount. Again, it is a matter of understanding financial statements, investment strategies, a sense of the market, and the laws. If people are not versed in these subjects, then obviously they must follow standard dogma, which is to play it safe. Diversify and only invest in secure investments. The problem with secure investments is that they are often sanitized. Often sanitized. That is made so safe that the gains are less. Most large brokerage houses will not touch speculative transactions in order to protect themselves and their clients. And that is a wise policy. The really hot deals are not offered to people who are novices. Often, the best deals that make the rich even richer are reserved for those who understand the game. It is technically illegal to offer speculative deals to someone who is considered not sophisticated. But, of course, it happens. The more sophisticated I get, the more opportunities come my way. Another case for developing your financial intelligence over a lifetime is simply that more opportunities are presented to you, and the greater your financial intelligence, the easier it is to tell whether a deal is good. It's your intelligence that can spot a bad deal or make a bad deal good. The more we learn, and there is a lot to learn, the more money we make, simply because we gain experience and wisdom as the years go on. We have friends who are playing it safe, working hard at their profession, and failing to gain financial wisdom, which does take time to develop. Our overall philosophy is to plant seeds inside my asset column. That is my formula. We start small and plant seeds. Some grow, some don't. Inside our real estate corporation, we have property worth several $1 million. It is our own REIT, or Real Estate Investment Trust. The point I'm making is that most of those millions started out as little $5,000 to $10,000 investments. All of those down payments were fortunate to catch a fast rising market and increase tax-free. We were fortunate to catch a fast rising market and increase tax-free. We traded in and out several times over a number of years. We also own a stock portfolio surrounded by a corporation that Kim and I call our personal mutual fund. We have friends who deal specifically with investors like us, who have extra money each month to invest. We buy high risk, speculative private companies that are just about to go public on a stock exchange in the United States or Canada. An example of how fast gains can be made is 100,000 shares purchased for 25 cents or cents each before the company goes worth 100,000 shares now are worth $2 each. if the company is well managed, the price keeps going up and the stock may go to $20 or more per share. There are years when our $25,000 has gone to $1 million in less than a year. That's Annunciation practice night 18 done. I'm on page 164.